Hi, my name is Bernd Nussbaum from macrobeat.co.uk. Today I would like to take a look at some of the more macro fundamentals in Europe, and in particular we're going to have a look at Germany, which obviously is the largest economy in Europe and one of the larger economies in the world, and so to speak the export champion. Even more so, it's concerning the quick or the fast deterioration we have seen in the German economy in the last several months. On the first slide, we're going to have a look at the GDP. 2019 GDP has just been revised down from 1.9% down to 0.8% from the industrial body in Germany. Obviously, the German government has had some revisions already, a few weeks ago. So that in itself is obviously no surprise, but it's just a surprise that actually now, even with one or two months having passed, the Institute for Economics that may have held out before revising the number just sees no turnaround in sight right now. On the next slide, we just take a look at in German industrial orders year-on-year data. This is just probably speaks for itself how fast the economy is deteriorating, and rather than actually seeing a turnaround earlier this year, what we actually see is an acceleration on the downside. This is for sure something that will worry the ECB, which is going to be meeting next week, and we come to that one a little bit later on. The next slide I'd like to show are the factory orders, a number that has been coming out just this morning. Another very sharp drop there, and we can just see we now back to sort of 2012 levels when we sort of run into the European crisis. Germany at that point, as you can see on the chart, wasn't as much under pressure as many of its European neighbors. But what is worrying is now that Germany, that should actually be this growth engine in Europe and leading the recovery on the continent, is just actually going the other way around. That brings me to the current conundrum, which I'm showing the DAX chart, the German stock market. And as much as we have seen a drift lower in the last, let's say back in 2018, but contrary, despite the ever weaker data, the DAX continues to rally and actually just making new highs as we speak in terms of the 2019 highs. We watched the 11,972 level on the DAX, a daily close above there today would actually just give us another, the risk of a continued push higher. And there I think is where the conundrum is, where the market is taking lower interest rates, yet again as bullish for equities, which I think is just a complete dislocation. To me, lower rates on the back of the very soft data we see out there is really more an amber warning than anything else. So at some point, I still feel equities have eventually to catch up. The next slide I show would be the Dow Jones. There I sort of marked with the arrows the sort of big area that we are looking at around this 26 to 80 area, which has been the top in the last few months. So close above there would obviously have the same impact in terms of seeing a rather extension of the rally. Still some hopes in the US trade talks with China. Apparently they just days away from concluding. Having said that, the recent sort of headlines in the last few days hasn't really seen the usual spike in risk or equities on the back of that trade deal maybe finally coming about. The last slide I would like to show is the euro-dollar chart. This is actually a weekly chart, so I just try to take a little bit of a broader look on where we are. As you can see, since basically October of last year, we have been running against this 112 area and haven't really managed to break any lower. I think a combination of factors could actually lead to a bigger break lower. We have another week of Brexit talks next week, and obviously we're running up to the final deadline. So a hard Brexit, which is still somewhat of a risk, could definitely add a lot of pressure on the euro. Then further, we have the ECB meeting next week, and given the recent data and the data we just discussed, there is probably a chance that they're going to go another shift, gear shift to be more dovish. This is it really from me. I wish you a lovely weekend and see you again next week. Thanks very much indeed. Bye-bye.